Hello and welcome to Asia Gaming Brief's face-to-face series. Today I'm talking with Matt Davey, who is the CEO of Tekkorp Capital. The company's just announced a major investment in a sports betting venture in Australia. We're going to be talking about that and also about mergers and acquisitions in the global gambling industry. Hi Matt, thanks very much for joining us today. Firstly, I'd like to congratulate you on your new venture. And
Thank you very much.
I think the best place to start is to ask you a few more details. What exactly is the venture that you're investing in?
Yeah, so I think just to set the kind of the context for it, the online sports betting world has been in and around for the last 25 years or so. Probably, some of the most mature markets in the world are the UK, followed closely by the Australian market. And what we've found is that there are interesting opportunities to invest in different parts of the ecosystem in the online sports betting world, be it affiliates, operators, payment processing, etc. And from time to time, we like to back great management teams with great opportunities. And so what we have done today, which we've announced, is Tekkorp's invested in a consortium that brings together an amazing operator with proven experience in Matt Tripp and his team, along with a fantastic media partner, News Corp Australia, with a great technology platform coming from BetMakers Technology, which I know well, having been part of that business for some time now. So what we're looking to do is help seed a challenging brand that can capture a significant amount of market share in Australia, which is quite a mature sports betting market. But we think the whole market itself is only 20 years or so old, and it has an enormous amount of growth built into it. And so we think there's some very interesting structural advantages that we can bring to the marketplace with new product, a fantastic management team, and the right kind of partners right across from technology to media.
You mentioned that it's a growing market, but ripe for innovation. Can you go into a bit more specific detail on what you think you can bring to this in terms of innovation?
Yeah, it is interesting. So when I built up the previous business I ran called NYX Gaming Group, we bought OpenBet, which was the largest technology supplier in the UK market. And I remember having long discussions with the operators on that platform, and they said, look, there's really, as much as we have 50,000 different events going on and we have a number of game suppliers and payment processes involved, etc., the actual product changes aren't dramatic. There's really been only 3 in the last decade or so that have changed the market. There was fast cash out, there was in-game betting, and then there was effectively a product called Bet Builder where you could build your own bet. And those 3 really were the primary kind of changes in product that really changed how people engage with the business. I think there's enormous scope for us to add to that, and we've only just started to scratch the surface for that. And so we think that there's a great opportunity to be able to bring in a fresh perspective with a newer technology platform and an experienced management team where we can help drive that forward. And we benefit from the fact that there's this ongoing migration from land-based gaming behavior to online. We think that will continue at pace. It's something I've spoken about quite a bit. And so we benefit from kind of wind in our sails already, but we can add to that by being quite innovative around the product range. One example I give you is when you're a sports bettor, you log on to whatever sports app you have, and typically the customers in the more mature markets like the UK and Australia have 4 or 5 different apps. You look for the sport that interests you, but you're flooded in a sea of other sports. There are thousands and thousands of events you can bet on at any particular point in time. How do we surface the events that you're interested in with the bet types that you're interested in? How do we do that cleanly with the least amount of friction? There's a lot of innovation yet to be brought into the market around that, and we think we can do some interesting things there.
So personalized betting, basically.
Yeah, that's right. So one of the big advantages of moving things to the internet was you can get whatever you want. The question is, how do you find it? And so Google built an incredible business around helping you find information that you're looking for. And we haven't seen the same level of innovation in the gaming industry yet. And I think that's a huge opportunity.
Okay. And you've obviously got the involvement of News Corp here. I know another big trend in the sports betting world has been the convergence of entertainment and sports betting. How are those two coming together in your view?
Look, I think the media industry itself has been challenged somewhat by this fragmentation of content that's happened with the internet. So the over-the-top kind of streaming that's happened, people can focus on what they want, which means you don't get the mass market audience, and that means linear TV has suffered from a reduction in audience over the last 10 years or so. Where they can fight back is on live sport. Live sport is a proven way of getting mass market attention back again. And I think that's where media is really powerful. What makes live sport more engaging is being able to have a wager on the outcome of that sport. And so I think there's a really nice natural coupling between the entertainment payload of live sport along with wagering ability. And I think that really just creates a lot more excitement and interest in sport. So I think that's attractive from a media perspective. And I think there's a natural harmony between what wagering operators are looking to achieve when combining the content itself with the media companies. And so there's a natural marriage there, but those marriages can also go wrong if they're poorly structured and not documented well and structured well, where incentives might be mismatched or they're not integrated well. And so one of the benefits we have at Tekkorp is we've had a lot of experience. Our president, Robin Shabra, helped engineer some of the best media deals that have come to market over the last 15 years or so. So we have an enormous amount of experience there in terms of what to do right and what to avoid from doing wrong. And we feel we've obviously brought that together in this deal here.
And you're obviously involved in investments and advisory in the gambling space. In terms of broader M&A, we've seen a wave over the last couple of years. Do you see that trend continuing?
I do. So I think when you look at the markets, and by the way, the US market, the European market, the Australian market, they're at different phases of their cycle. In the initial phases, you get enormous growth, and that's what we've seen in the last 3 years in the US. But growth consolidates, and then you're looking at what do the number 3, 4, 5th player, for instance, in any part of that ecosystem, be it payment processing, affiliates, or operating, or supply, what do? And they either get stronger by consolidating with some of the smaller guys, or they get absorbed by some of the larger guys. So I think we'll see significant amount of consolidations. I think that'll drive M&A, but we'll also look at companies plugging strategic gaps in their portfolio. So if you are a great sports betting operator but don't have a strong casino platform, I think they'll look to acquire companies that are strong in casino. A good example of that would be DraftKings acquiring Golden Nugget, for instance. The flip side to that is there have been other companies that have bought interesting businesses, but they no longer fit with their corporate strategy. And so you'll see spin-outs of those businesses. And so, for instance, Scientific Games, now called Light & Wonder, sold the OpenBet, the sports betting platform, out from its business. So I think you'll see both consolidation as well as spin-outs, and I think that will be pretty interesting. We've also seen a contraction in market multiples now. So valuations have contracted somewhat, particularly in the first quarter of 2022. I think that makes it more interesting for acquirers. So I think it may accelerate M&A at this point.
That was actually going to be my next question, because the last time I discussed this, the valuations and the multiples were getting a bit silly. So what's brought those down? What's happened?
So the current thesis is that as interest rates increase, the ability for companies to discount, or investors to discount long-term revenue growth and EBITDA is reduced. So we don't have the patience now to wait for a company that might be profitable in 20 years from now. We want to see profit this year or next year. And so the value of those businesses have been reduced, and the value of companies that are producing cash and positive EBITDA has increased. So I think we're seeing a shift in terms of valuing businesses on a multiple of revenue to now more a multiple of cash flows and EBITDA. And that's having a dramatic impact in terms of where valuation sits today. And that's largely on the basis of people think inflation's increasing, which means that the federal governments will need to increase interest rates, and that makes the borrowing, the cost of capital increase, but also the attractiveness of cash and cash yielding assets becomes a lot more interesting now than it was before.
Do you think investors will be less keen to get involved?
Look, I think a couple of thoughts on that. One, yes, interest rates look like they've gone up dramatically. So mortgages, for instance, have gone from, I think, the average 2.5% to 5% for a 30-year mortgage in the US. So definitely we're seeing the impact of interest rates. It makes the cost of borrowing more expensive. So that's certainly driving a stronger focus on cash producing assets. But at the same time, 5% is not 18%. It's not like it's back in the 80s, for instance, right? So it's still very cheap to borrow. I think there's still a strong appetite for institutional investors to lend capital to companies. So I think there's going to be still an ongoing demand for growth. I think investors will look for growth, and the gaming industry, certainly the digital side of the gaming industry, is going to continue to experience significant growth. When you look at the operating metrics of FanDuel and DraftKings and BetMGM in the US, for instance, they're all experiencing still phenomenal top-line growth, and I think that's going to be very attractive. The nuance now is that we're going to look for the ability to get to cash flow positive operations, so you don't need to go back to the capital markets to borrow more money or raise more money. I think that's going to be important. So it's going to exert a certain amount of operating discipline on businesses. But I think investors still love growth. I don't think they've gone from growth investors to value investors that are happy for a 3% growth per annum and collect a 10% dividend. I don't think we're going to switch into that world. But I do think that there's a certain amount of discipline now that's been imposed on by the market to show that people know how to run a business profitably.
And we've spoken about now the US, we've spoken about Australia. Do you see any opportunities in Asia?
Yeah, I think also from our perspective, we tend to focus on the highly regulated markets where we know what the rules and regulations are. I think it's been a little grey, a little harder to navigate from the Asian markets. What we do know is the propensity to gamble is strong. There's a strong cultural appetite towards both sports betting and lotteries and other products. So we have no issue on the demand side there. It's really about what's the supply side solution there. And perhaps from our perspective, we would look to invest in infrastructure providers, so that the underlying software and technology providers, payment processing providers, artificial intelligence, marketing businesses, that seems to us to be a pretty sensible place to invest. So we like aspects of certain parts of Japan, for instance, and other markets within Asia. We also like Latin America. We think that is another area of rapid growth that we can successfully deploy capital in.
What about some of these newer technologies, crypto, metaverse, NFTs? Do you see a role for those? Or from an investment perspective, how do you see those? How do you view those particular assets?
We think that whole field is very exciting. I think the first stages of that market have been driven by early adopters. And not necessarily by sustainable economies, by sustainable products that actually create value. It's more about hype and just being new and first. But I think that gets replaced by good product and good businesses and good gaming experiences and great entertainment. And so we want to be there as well as that market expands. So we're investing a significant amount of time and a certain amount of capital into what we call Web3 type gaming businesses. We think that there is a huge scope for that. One of the things that we've learned over the last 20, 30 years or so in the gaming industry is consumer habits do change. They change from time to time. They go from land-based to just web, and then they went to mobile, and then they went to social, and now they're going to Web3. And we think that there is a large part of the market that is comfortable being on blockchain and working with digital currencies. And DeFi and all sorts of different technologies that go into creating this ecosystem. So we want to be there. We want to be investing with great entrepreneurs that are building out this next phase in the industry.
As an investor, though, how do you sort out the wheat from the chaff in some of those things? I mean,
really good question. Yeah, no, it's a great question. That's the $1 million question. But we call it it's both an art and a science. And in the frontier type industries such as Web3, it's more art than science. But what we rely on is a playbook that we've worked on over the last 20 years or so, where we understand what fundamental value is. Ultimately, people like to either get some utility from something or entertainment from something. And if we can get comfort that the utility is strong and sustainable and valuable, then we'll invest in that. Or the entertainment itself is not just a flash in the pan, but something that has deep intrinsic entertainment value built into it, be it a game mechanic or a certain intellectual property right, or a way of getting critical mass, then we'll invest in that as well. But there is absolutely no proven playbook. So we lean on our past experience, a bit of our scientific thinking around it, but also the art behind it.
Thank you very much for joining us. That's fantastic.
Davis, thanks, Sharon. Take care.
Thank you for joining us today. Please join us every Friday for our series of interviews with thought leaders in Asia's gaming industry.